Hello, my name is Mrugesh Joshi and I am here to present for group number 31 Company Pioneer. My group members are Maitri, Raju, Sunny and Tapan. Beginning with statement of cash flow. Financial statement has been divided into three parts: balance sheet, income statement and statement of cash flow. Statement of cash flow has basically two main purposes. First is to provide information about company's cash receipts and cash payments during a period. Moreover, it also provides cash basis information about company's operating investing activities. Cash statement of cash flow includes assets, liabilities and equity. Assets are those what company owns, liabilities are those what company owes and owner's equity. Statement of cash flow has basically five main components: current assets, long-term assets, current liabilities, long-term liabilities, and equity. Talking about current assets, those are current assets which has cash and other assets that are expected to be converted into cash within 1 year. It has been divided into subclass, for example, cash and cash equivalents, market securities, accounts receivables, and inventory. Talking about long-term assets. Long-term assets are investment assets that is invested into more than 1 year. It has been divided into PPE, that is property, plant, equipment, investment in long-term securities and intangible assets. Current liabilities. Current liabilities are those obligations due to paid within the next year. It has been divided into account payable, notes payable, short-term debts and current portion of long-term debt. Moving towards long-term liabilities. Long-term liabilities are those obligations that are not expected to require to use of the current assets or not expected to current liabilities within 1 year. It has been divided into subclass, that is long-term loan, capital lease and bonds payable. Finally, moving on to the shareholders' equity. Shareholders' equity is the residual interest of stockholders in the assets of corporation. It has been divided into three: contributor capital, retained earnings and treasury stock. As we can see in the graph of the statement of cash flow, the net cash for the 2016 is highest, and in the 2017 it has been suddenly dropped off.
Financial statement analysis is the process of using analytical tools to examine and compare financial statements of a company in order to make business decisions. The three main ways to analyze these are horizontal analysis, vertical analysis, and percentage change analysis. Starting from horizontal analysis, also known as trend analysis, compares the amount of financial statement items over a period of time. Here, statements for two or more periods are used, selecting 1 year as the base year, and all the items are compared with the base year. As shown in the graph of horizontal analysis, for year 2016, every item is at its maximum. Now, talking about the balance sheet, there is not much difference for the year 2016 and 17, but for few quantities like accounts payable and notes payable, they are at its peak. Going to the second way of analysis, which is called as vertical analysis, it is a method in which each line item is listed as percentage change of a base figure within the statement. So, line items on an income statement can be stated as percentage of gross sales, while on a balance sheet it is stated as percentage change of total assets. For the vertical analysis of income statement, the graph shows not major difference in any item throughout the 4 years. As for the vertical analysis of the balance sheet, you can see that long-term assets and total long-term assets along with the PPE net is at the maximum. The last analysis is the percentage change analysis, which examines how two items change as a percent from one period to another period. The income statement graph here shows the percentage change, which is most for the 2017 is negative. And for the balance sheet, it is seen that the percentage change for the year 2015 is the highest for almost every item.
Liquidity ratio. It is a financial ratio that indicates whether the company's current assets will be sufficient to meet the company's obligations and also to meet unexpected need for cash. Here, the graph on the right shows the change in all the liquidity ratio from the year 2014 to 2017, where the left-hand graph gives idea that the NWC in the year 2016 is the highest, while in 2017 is the lowest. Then company NWC to total assets, we can see that it has more than 50% in 2014, which drops less than 2% in 2017. Now financial leverage ratio, which also known as solvency ratio. It helps to know that the company is able to survive over a long period of time. Our bar graph here shows the difference of all financial leverage ratios like debt, equity, long-term debt, and other important ratios like cash coverage, equity multiplier over a period of time. Profitability ratio. It is a method to know and measure the income or operating success of a company for a given period of time. Here, the average percent of profit margin is the lowest over a period of 4 years, while the average of percent of returns on equity is highest over a period of 4 years, which is shown in our graph.
Hello everyone, my name is Sunny and I will continue with market value measures and enterprise value. Enterprise value is an economic measure reflecting the market value of a business. It is addition of market value of equity and financial debt minus cash. In this graph, enterprise value of Pioneer Company from 2014 to 2017 is given. Highest enterprise value approx 3,750 million is in year 2016. To evaluate the economic status of publicly traded firm, we use market value measures. It includes different parameters like earnings per share, dividends per share, price earnings ratio, dividend payout ratio, retention ratio, dividend yield, market to book ratio, sustainable growth rate. In the graph of market value measures, all the parameters of market value measures is shown. In other graph, asset turnover ratio of company Pioneer through 2014 to 2017 is shown.
Free cash flow to firm is the cash flow available to all funding providers, which are creditors and shareholders, after all operating expenses have been paid. It is also known as cash flow from assets. As shown in the graph, the year 2017 has the highest FCFF, whereas in the year 2015 the lowest cash flow to firm. The free cash flow to equity is the amount of cash available to be distributed to shareholders. The line graph shows that FCFE was $20 million in 2015, which went up to $18 million in 2017. Now talking about FCFF versus FCFE. As we can see the graph of FCFF versus FCFE, we can analyze that FCFF is available to all distribution, and in our case FCFF is greater than FCFE. Now talking about economic value added and market value added. Economic value added is measure of company's financial performance, and market value added is the calculation that shows the difference between market value of the company and the capital. As we can see, the market value is constant and the EVM is increased and declined after certain time. That is the end of our presentation. Thank you.